And both an ounce of gold or 60 ounces of silver will do the same thing for you. It will give you sound money, and it'll be sound money without any counterparty risk. The only caution that I make about silver is that it's a lot more volatile than gold. And we saw last year that the gold-silver ratio was as low as 45 and as high as 84. And that's pretty heart-stopping to see silver with that kind of volatility relative to gold. So silver may not be for everyone, even though I expect silver to outperform. It may not be for everyone simply because of that volatility.
And people like to say silver is not a monetary metal, but many investors have been turning to silver as money in order to protect themselves, as you know, James. Is silver both a monetary and industrial metal in the end?
Yeah, it is. It serves two purposes. And what makes silver so volatile is that the nature of its demand. To put it in economic terms, the demand for gold is inelastic, as economists call it, meaning that people want it regardless what the exchange rate is. It's not sensitive to changes in price. But the demand for silver is very elastic, which means it's very sensitive to changes in price. So because you have this sensitivity of silver's demand, you get this tremendous volatility. But at the end of the day, as I say, both gold and silver accomplish the same thing. You own a tangible asset with it's monetary, can be used for economic calculation to determine the prices of goods and services, and they both accomplish the same thing. Looking at prices, for example, back in the 1950s, I remember you could fill up, when I was a young boy, parents could fill up a car with $2 silver. If you look at $2 silver today at their market value, about $28, you can still fill up a car with gasoline for $2 silver. So silver also preserves purchasing power just like gold does, but you do get this volatility between the two metals.
Let me ask you about investing now in the shares themselves, be they gold shares or silver shares, because when we had the last depression, as you know, when you look at 1929, stocks ended up from the peak going down 90%. And as you know, homestake mining was up huge for people that were in that. I think when you include dividends, it was up roughly tenfold over, say, a 6-year period. Does that sound about right to you, James?
Yes, it does.
And so if that's the case, let's talk about investing here. Because if you're in gold and you're trying to keep what's $1 today, $1 tomorrow, and that's not investing, some of these offer huge potential upside. And we don't want to name any names, but for people out there that are interested in the shares, what are your thoughts on people going into the shares themselves of gold and silver stocks?
Yeah, if you're inclined to invest, you have to look at the shares as a way of participating in what's likely to evolve in the future. But when you have a portfolio, you have two different components to it. You have cash and you have stocks or investments. And they accomplish two different things. Cash is liquidity, and that's where gold bullion goes. It's really money, it's liquidity, it's not an investment. It preserves your purchasing power until you're ready to invest or until you're ready to spend that purchasing power. When you're buying mining shares, you have to go through the same analysis that you would for any stock investment. Quality of the management, quality of the property, quality of the balance sheet. And you're making an investment and hope to generate a return on that investment, either through dividends or appreciation of the share price. So, yes, if you're inclined to look at stocks, mining stocks and commodity stocks in general, I think are the place to be for the next several years.
Eric Sprott, when I interviewed him, was pointing out that some of these smaller producers were going at maybe 5 times, go-forward type earnings, and some of the larger ones were more like 20 times. So he expected this consolidation to begin to happen as some of these larger ones. He said if I was running a larger one, I would simply go and acquire, even with a premium, some of these smaller ones, because I can use not overvalued paper, but paper that was much more expensive than some of the smaller ones that I was acquiring. Does that sound about right to you?
Yeah, it sounds exactly right. And, we have seen a lot of consolidation in recent years as the margins of the mining companies were squeezed. What was happening is that input costs were rising faster than the gold price. As well as gold has done over the past few years, crude oil prices, energy prices were rising more rapidly than the gold price. So margins were squeezed. And in order to try to improve earnings, we did see a number of consolidations. I think those are likely to continue. But there are opportunities both in the majors as well as the smaller producers.
And what about, and I talked with Bill Murphy about this last week from GATA, but the fact that you have the price of gold maybe not realistically reflected in the marketplace because of some government types of intervention. If you listen to the gentleman from GATA, if you have an artificially suppressed price, it sort of, I guess, makes it so that people don't want to go out and cultivate or look for that type of commodity, whatever it may be, oil, natural gas, whatever the case may be. We're not really seeing, James, are we, any type of drilling or normal exploration going on in the mining sector because the price is still very cheap. Is that right?
Yeah, that's right. And production has been falling in the last couple of years. Capital goes to where it's best rewarded. And if you have price controls, capital will stay away from that sector. And the price control through the government's intervention has been so well documented by GATA, has kept the gold price artificially low. So it's only natural that capital would not flow to that area because it's not getting the best possible return. But on the other hand, that's where the opportunities are too now. Particularly, in bullion, gold is much lower than it would otherwise be in a free market. And while I hate to see governments screwing around and intervening in the free market, they have sort of been helping everybody who's been accumulating bullion because we've been able to get rid of overvalued dollars and buy undervalued bullion at prices lower than would be the case if the government wasn't in there intervening. So, there are always two sides to a coin, and you have to look, I think, at both sides.
And James, just in closing here, you have a company, goldmoney.com. Can you talk a little bit about that?
Yeah, we're storing for our customers gold and silver that they own, approximately $670 million. We're a very convenient, economical, and most importantly, safe way to buy and sell gold and silver. And what you do is you go to goldmoney.com, and we store the gold and silver that you own for you in vaults in the UK or Switzerland.
And then do I get serial numbers from the bars I own, or how does that work? Because with an SLV or GLD, you don't get anything like that. How does it work at your place?
Yeah, this is real physical metal that you own. It's audited, and you have access to the audit report. If you have enough gold and silver to specifically allocate a bar in your name, we can identify that bar, and it's your bar that's being held and stored for you in either one of those two vaults, or you can use both vaults if you want. So it's real metal, it's physical metal, and the advantage is that there's no maximum or minimum. And particularly if you see gold as I do as a way of saving, and you want to put a little bit of money into gold every month, Gold Money is a great way to do that, because when you digitalize ownership of gold, which is essentially what we've done in Gold Money and what our patents are based on, you're able to buy a part of a bar sitting in a vault and do it very, very economically, because you're not paying the fabrication, shipping, and handling costs that comes with small bars or coins.
And same way with silver. I can just send money your way, and it's the same deal with silver.
Exactly, and platinum. We've added platinum just recently as well, and that's doing very well too.
All right, sir. Well, thank you very much for joining us.
Thank you, Eric. It's a pleasure.
Thank you for joining us at King World News. Remember to tune in next week for another great show where we will have Peter Barnes, CEO of Silver Wheaton, Bill Fleckenstein of Fleckenstein Capital, and much more. Also, remember to go to our Gold Plus page for exclusive weekly interviews with Ted Butler and GATA.